How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report data for March 19, 2019. So here's a snapshot of the institutional positions on the major pairs right here. And so we're going to start taking a look at gold. But as we go through the data, it's important to recognize that this week's data, we have to take into consideration that contracts were expiring during this week. So we'll see some positions that are way off whack. Okay, they're not in line with what we've been seeing in the previous weeks, and this typically happens because they're in the process of closing contracts and opening up new ones, so they'll tend to be a little bit off at times. Some will be correct, some won't. Okay, and so when we get to those, I'll point those out to you. But first, when we take a look at gold, what can we see here? We see that this data represents this candle right here, mostly this candle right here, and a little bit of this green candle to the upside here. And what we can see with the institutions is that they closed off some of their longs. Okay, so profit taking on longs. Remember, here back in February is where they were at their most aggressive with longs, and that would make sense because they needed to push price up into the area of supply for them to be able to close off those long positions. So aggressively adding long, closing the longs. And now down here what we see is shorts close off from 126,000 to 115. So that's quite significant, all right, from 126 to 115. But if you remember, we were at 115 just a week prior to this one here. Okay, so if this candle represents this one, then this 126 represents this, which means shorts were being added up here. So shorts were being added, and then they closed off those shorts for profit taking. Now what happens when shorts get closed off? It causes price to move up, and that's exactly what we see here. Okay, so this move up is not caused by buying from the institutions. This move up is caused by profit taking on shorts, and it just so happens to be the move upwards into an institutional trade signal that we took on the portfolio. Okay, so that is working out quite well so far. And so if we take a look here, we can see that a few weeks ago the bias was somewhat neutral, but since then it has become a little bit more bearish. All right, now if we take a look at net positions, they still are bullish, but that's because they've had to cause price to move all the way up, so it's not going to make any massive shifts anytime soon. But so far what we're seeing here is pretty much in line with the analysis that we've kept for many months now. Okay, so now let's take a look at oil. As for oil, we see a big move up here take place, and that was caused by institutions buying, increasing their positions from 500,000 to 534,000. Now, we've been saying this for quite some time, that this move up, it has been expected, and we are even expecting it to go further. And as this has been building, we can see that the sentiment has become more bullish, and we can also see the net positions have been increasing as well. So shorts becoming less aggressive, and that's because of the big push up here. Now, if they were to start adding shorts, which is what we believe is going to happen in the coming weeks, maybe even months, it's going to be higher up here. Even up in these areas here, it could happen, but not down here. Okay, it usually will be a little bit higher up, closer to supply. So far, everything is in line with that big retracement for the bigger move to the downside. Okay, now we take a look at the dollar. So with respect to the dollar, we see that price responded from the tested weekly area of supply to the downside, and that was caused by a move from them closing long positions from 45,000 to 38,000, and as price dropped, they also added shorts from 9,000 to 12,000. Bottom line, if you take a look at the shorts, they are cooled off. All right, we used to be bullish, somewhat more neutral now since they closed off those longs, but at the end of the day, net positions are still holding on to the bullish side, and we've got this, we've got this. We need one of these doors to open for the floodgates to push through. And as we are seeing it right now, the bullishness still resides, so it's likely we're going to see a push up like that take place on the dollar. Now we go over to the Aussie. We've been bearish the Aussie for quite some time. Price moved up right into the descending weekly trend line, and as that took place, they closed off some longs and they added some shorts. Bottom line is net positions increase more so to the bearish side, and the sentiment becomes even more bearish with an increase from 73% short exposure to 78% short exposure. So everything's still in line with our analysis. Now we take a look at the US CAD. So we were able to predict the rally up from this demand zone here. We knew that they were going to get bullish even before price dropped into that. Up here we knew that they were going to become bullish up down at these levels here. And that's exactly what has taken place. So we knew that they were going to take profits on long positions, which we can see take place here, from here to here. And now we're starting to see an increase in those long positions again. This time from 61,000 to 64,000 positions. And what are they doing with the US CAD? Shorts, 20,000 down to 16,000. Shorts becoming ever more cooled, and longs becoming somewhat more aggressively long. If you take a look at the long exposure, they increased from 75% to 80%, which is a pretty substantial move higher. And also net positions from 41,000 to positive 47,000. So this is in line with what we're seeing with the dollar, the expected move to the upside, and the overall dollar strength. Now let's take a look at the US Swiss franc. Now, are we going to see signs that are similar to the US CAD? Well, we had a drop down from the highs, and as that took place, there was a little bit of profit taking on long positions. But take a look here. Big drop in shorts from 12,000 to 7,000. Now, is this because they were in the process of shifting their positions from one contract to the next? It's possible, but not out of the realm of possibility that this was done on purpose. Because sometimes what we've learned is that the institutions will use contract expiration as a way of shifting their positions in a more favorable way that they want to hold. So we look here and we see long exposure increase from 74% to a more bullish 82%, and net positions increase 23,000 to positive 27,000. So this is in line with what we're seeing on the US CAD as well. All right, now let's go over to the Euro US dollar. So price moved up just like the Aussie US dollar, hit the descending weekly trend line and is pushing down. But the data reflects this candle to the upside. Longs were closed off from 151 to 141, and shorts also closed off from 227 to 219,000. Bottom line, total exposure was not closed, but reduced from 379 to 361,000, and an increase slightly with short exposure, 1% from 60 to 61%, and net positions increased from negative 75 to negative 77. So bottom line is they're increasing their overall net exposure to the downside. Now we move on to the pound US dollar. What do we see here? Pound US dollar longs increase from 29 to 30,000, and big discrepancy here, right? If you take a look at these numbers here, and then this massive jump in shorts, it's likely a discrepancy based on the contract expiration. Likely. But we won't know 100% until we see next week's data. Next week's data will provide us the answer as to whether or not it was in the process of being switched over, or if indeed they use contract expiration to massively shift their exposure downwards from 69% short to 59%. Okay, so we'll have to wait until next week's data to be for sure on that. Taking a look at the US dollar Japanese yen, what we can see is long exposure increased 1 point, It went down in positions, but because shorts went down from 22 to 20, long exposure goes up, a little bit more bullish. Is that not what we see with the dollar, with the US CAD, US Swiss? Pretty much the same thing, right? And that came right before this slight drop here from the supply zone that we had mapped out. Okay, now we take a look at the Kiwi dollar. Kiwi dollar, we see closure of longs from 20,000 to 17, an increase in shorts from 16 to 18. So that takes place as price was making this move higher to test some supply. And again, a little bit of neutral into a little bit more bearish territory. We are expecting a bigger move to the downside to take place, but still consolidating at this point. So not much more to see here in terms of what the institutions are doing. All right, ladies and gents, so that is your CFTC report for the data reported on March 19, 2019. Hope you have a great day, and we'll see you next time. Take care.